Almost 1 Ether would have been burned in past year if fee proposal approved. The controversial Ethereum Improvement Proposal, EIP, 1559 would have burned 970,000 Ether, ETH, with a total value of $360 million, in the last year, if it had been implemented. EIP 1559 seeks to reduce transaction fees by introducing flat fees alongside a burn mechanism. The findings, based on Dune Analytics data and published by the head of DTC Capital Spencer Noon, have raised questions among some in the wider Ethereum community as to why the proposal has not been implemented already. Twitter user Lore Science suggested it should be implemented in the next hard fork, adding, "Hopefully, we don't keep discussing this for 2 more years while miners get too much $E.D.H. and dump it for $U.S.D, keeping the $E.D.H. price in check." Cumulative ETH burnt with EIP 1559. Source, Dune Analytics. Although the idea of burning fees has long been considered, even prior to Ethereum's Genesis block in 2015, EIP 1559 was the first serious proposal to suggest integrating the concept into Ethereum's code. The current proposal, first suggested way back in 2018 by Vitalik Buterin, would drastically change how transaction fees are calculated. EIP 1559 proposes that all transactions have a standard flat fee called a base fee. This fee is burned and the incentive for miners comes from users adding a tip on top of the base fee. The proposal allows the base fee to be varied to help keep block size around 10 meters gas. Ultimately, the proposal has 4 design goals: predictable fees, consistent block size, increased security, and preventing economic abstraction, fees being paid in other tokens. As EIP 1559 will significantly impact how miners earn revenue, it has triggered pushback from the mining community who have recently been enjoying record revenues. A week ago Masari stated that Ethereum fees have surpassed Bitcoin fees for a record-breaking 2 months. That same day Consensus developer Tim Bako published the results of a survey of 25 teams building on Ethereum about the proposal. Of those surveyed, 60% responded in favor. However, 8 of the 9 mining firms queried asserted they would reject the proposal if implemented as a hard fork. Earlier this year, MetaMask lead developer Dan Finley expressed concern behind placing the responsibility on miners to fix the base fee parameters. Ultimately, Finley suggested the net effect of the proposal would be to make the tip a sort of single price auction within each block that reproduces all the problems of the current market but with the additional complexity of this one. Ethereum name service developer Nick Johnson stated his apprehension of the proposal due to the lack of any formal analysis that shows 1559 behaves as intended. In July, responding to ever-increasing gas fees, Vitalik Buterin once again called on EIP 1559 as the ultimate solution. Transaction fee revenue is now nearing half as high as block reward revenue. This actually risks making Ethereum less secure because of https://t.co/days8sl30z. Fee market reform, EIP 1559, fixes this, another reason why that EIP is important. pic.twitter.com/eq367. Vitalik.eth, at Vitalik Buterin, July 21, 2020. Within 1 month of Buterin's tweet, total transaction fees for Ethereum passed that of Bitcoin, BTC, before taking a steep ascent to all-time highs. This is not the first time EIPs have divided the Ethereum community due to malaligned goals. Last month, EIP 2878, which would reduce block rewards by 75%, was also criticized heavily by the mining community.